biggest mistake in crypto, thinking in months instead of in decades. I'm Funsho Ajibade. I'm the founder of Primeblock Capital. And for the past 8 years, I've helped people make generational wealth in crypto from one simple strategy: disciplined accumulation. So today, the video is going to be a little bit different. Okay. Today, I'm going to be teaching you guys a few things. You're going to learn why no stop losses is my #1 rule for long-term holding. The 3-phase exit strategy that I use without selling too early, and also how to reaccumulate during crashes to 10x your position. This is how money's being made quietly in crypto. So grab some popcorn, make yourself comfortable, because you are not going to want to miss this video. Let's get into it. So today's video is wealth versus trading: how to build generational crypto wealth, the 2025 guide. And I'm going to start off with something very simple, and that is the accumulation mindset. Okay, so long-term wealth isn't built by selling. It's built by holding through volatility and doubling down when others panic. So here's my framework for that. Okay, firstly, the 10-year rule. Only invest what you don't need for the next 10 years. What this does is it removes emotional decisions during these huge drawdowns that we see in market collapses of up to 80% or more. Secondly is reaccumulation triggers. So when Bitcoin drops 50% or more from its all-time highs, that is your signal to buy more, not to exit. People who did this in 2015, 2018, 2020, they multiplied their positions every single cycle. And this is exactly what I teach my clients. And number 3 is no stop losses. Okay, stop losses guarantee you sell low. Instead, what you want to do is use dollar cost averaging. My clients add 5% or more to positions every time prices drop 30%. It's very, very simple. And if you look at backtest results of dollar cost averaging versus stop loss strategies, dollar cost averaging wins every time. Okay, if you think about it logically, you've got Bitcoin at 100K as an example, and you put a 10% stop loss in there. It drops to 90K and you're now out of the game. You've got $90,000 that you're going to reinvest and wait to see where the price goes. The reality is this: if you're going to see a 50% drawdown in Bitcoin, it's not just going to happen once in one go. You might have a 10% drop, then your stop loss is gone. Then the price might rise. Now you're catching up thinking the price is going back up and over $100,000. So you end up buying in again, followed by another 10 or 15% drop. And this continues until that 50% correction has completed. But the problem is that might have happened 8, 9, 10, 20 times during that process of 10% drops. So each time you put that stop loss on, you're actually making the amount of money that you've got in your trade continue to shrink in size. So dollar cost averaging works far better as far as I'm concerned. Right, now I want to talk about my 10-year portfolio. So this is the set and forget portfolio that I'm building for 2035. And yes, I said 35, not 25. One of the biggest problems that I see with people is they want to get rich quick and they haven't got the patience. You need a long-term outlook and plan if you're wanting to really grow generational wealth. You can't keep jumping in and out. So firstly, it's Bitcoin. Okay, 40% is going into Bitcoin for me. Okay, it's the only asset with fixed scarcity. If you don't understand what that means, there are 21 million Bitcoin that will ever be in existence, which means it has scarcity. It cannot be printed. You cannot get more of it. It is just going further and further down in supply that is available for people. Also, exit strategy for Bitcoin. Okay, I'm looking at selling 15% of $500,000, 15% at $750,000, and 15% at $1 million, phased over a 10-year plus time frame. Okay, the rest I'm not selling. It's very simple for me. I believe in the future of Bitcoin, its scarcity. I think it will continue to go up in value. The institutional interest around it is phenomenal and is only going to continue to grow. Number 2 on my list is XRP by the company Ripple. Now, this is banking infrastructure adoption, and this for me is like a 20-year play. Okay, I am reaccumulating as much XRP as I possibly can at the lower price points. So if by some miracle XRP drops to around 30 cents, I would double my position in a heartbeat. Okay, this is the asset that banks are utilizing for the new financial system. They are doing deals with central banks. They are doing deals with retail banks. And for me, it's an absolute no-brainer. If you're not aware of what XRP is or what it does, get online and find out more about it. Because for me, it's an absolute sure win. I love this product. I think that it's fantastic and they're solving a major problem. It has real world utility and it's here to stay. Next on my list is I would be allocating 20% to Ethereum and other blue chip tokens. Now, the reason for this is because you've got staking rewards with Ethereum. Okay, and these can compound over decades. At the moment, if you were to go and take some money and put it in the bank, you might get 2-3%. With inflation eating into that, you're not really making anything at all. With Ethereum, you're looking at over double that. So you are actually getting something back. And it's also solving a major problem. And there are also a lot of competitors that are out there fighting for what Ethereum currently has. It may well be that Ethereum is not the winner later down the line, but for right now, I feel the amount of deals that they have got in place, the Ethereum Foundation, the fact that the banking infrastructure and bonds are also utilizing the problem that it solves with smart contracts and blockchain technology for finance. I think Ethereum is going to surprise a lot of people. It's not moved a lot over the last few months in comparison to some of its competitors, but I think it's one of those projects that's too big to fail right now. And you have to look at what institutions are doing. Institutions are plowing money into purchasing Bitcoin, into purchasing Ethereum. Okay, these are the two that are getting spoken about the most, and you need to follow where the smart money is. So alongside Ethereum, I would definitely recommend projects with a 10-year plus development roadmap. This is really important to know that you're dealing with a project that has got a much longer term outlook with the way that they're building, and that they're solving a serious problem and have real world utility. So projects that I can tell you about that I'm definitely invested into Injective Protocol, Solana, Ondo Finance, Sui, and also Render. All of these projects have their own unique outlooks with problems that they're solving. Okay. And I truly believe that the ones that I've mentioned to you today have got massive potential to grow long term. One thing to remember, guys, nothing that I say on these videos is financial advice. I'm not FCA registered. This is purely my experience and my view on what I'm doing. You know, you guys can do whatever you want to do, but I just wanted to make sure that people understood the way that I'm positioning myself. So you guys don't make a lot of the same mistakes that I've made previously in other cycles. So moving on, 15% is going to be for a cash reserve. Now, some people say that that's quite high. If I'm honest, I'd be happy with it being even higher. Now, this is for crashes. You know, you always want to keep dry powder on the sideline, ready for those 70% plus market drops that we have at the end of each cycle. Now, I'm going to talk to you about a crash recovery system. Okay. Now, here's how to profit from crashes without trying to time the market, where you can end up getting caught out God knows how many times. Okay, so step one is the pre-bucket system. Okay, now this is a system that I've come up with that works for me. Okay, so I allocate crash cash into 3 buckets. Okay, 50% of the cash is for 40 to 50% dips. 30% of the cash is for 60 to 70% dips, and 20% is for 80% plus crashes. Now, not all the time it's going to reach some of the higher numbers, but that is how I allocate, and that's step one. Step two is the 200-week rule. Now, when Bitcoin crosses below its 200-week moving average, just like it did in 2022, that's your signal to deploy bucket number one. And step number three is patience beats panic every time. Okay. In 2022, my clients that followed this method, I mean, Bitcoin was being bought at 16K. Today, that's like a 5x. And what are the expectations on Bitcoin for this cycle? 200K plus. Okay. You can 10x your money very easily just by step, taking your time, using patience, not panicking when the market is high or low. The real win for my clients is coming in 2032. Never mind what they've already made today. So I'm giving you guys an opportunity to join this long-term movement. If you're serious about building decades-long wealth, then you can join my free WhatsApp group. So here's what we focus on, okay? Portfolio building strategies, quarterly accumulation check-ins, crash reaccumulation alerts that we deploy, tax-efficient holding strategies, premium newsletter with all the latest insights, information, news, and of course, direct access to me, the rest of the team, and join in a community of like-minded investors that have that long-term outlook as well. No day trading, no leverage, just time-tested accumulation results that work. The link is in the description. Join it today. I hope this video has given you guys some great information that you can use to crush the markets yourself. Make sure you tune in for the next video and stay sharp out there.